Good afternoon. Let's wait for 5 more minutes and then start. Good afternoon, everyone. I think we can start. In this session, what we are planning to do is uh, I'm audible, visible, it's all perfect, right? See, what we are planning in this session is I've told you, see, multiple times I'm telling you, if you are not prepared as per the plan, it is fine because there will be a target and sometimes we'll be able to achieve it. And most of the time, 99% chance that we are behind the schedule. And that is totally fine. That is totally fine. Actually, we are making an attempt to cover maximum areas. Okay, is it? Were you able to cover that? Yes. At least 90 percentage. Little slow, no? Yes. Thank you. Hmm? Now, it's a very easy question paper, very easy question paper, but maybe, yes, I'll share the question. I wanted you to do it live. That is why I'll share the question paper in the group itself. Please set maybe a 30 minutes and try. Maybe you will be able to finish it before. It's just 5 MCQs and two detailed questions. We'll start from maybe now it is 3, 4. I'm sharing the question paper in the group so that you can try rather than just doing the screen share. You can check the question, you can read the question. It's just 5 MCQs, repeated type of MCQs. So just try it and I'll be here live only. So if there is a doubt, you can not answer, but if there is a doubt, you can just send me a direct message. I'm here only. After that, after 3:35, we'll discuss the answer. Okay, can you all try it? See, guys, whether you have finished or not, we are going to discuss. Hmm? Shall we? Just give me some yes. Yes, we'll do. The first question. I'm going to read this question number 1. Okay, the MCQ question. Um, on 1st April 2012, the company began the construction of a new production line in its aircraft parts manufacturing shed. Okay, costs relating to production line are as follows. Cost of basic materials, list price 12.5 lakhs less 20% trade discount. Okay, that can be deducted 10 lakhs. Recoverable goods and service tax GST, but not included in the purchase cost. We have learned that refundable cost cannot be capitalized. Taxes which are refundable. So GST, refundable, recoverable, can you capitalize? No, it cannot be capitalized. Employment cost of the construction staff for 3 months till 30th June can be capitalized if it is 3 months. Other overheads directly related to the construction can be capitalized. Payment to external advisors relating to the construction, yes, can be capitalized. Directly attributable expenditure. Expected dismantling and restoration cost too. So you should take the present value of this. Present value can be capitalized. Okay. The production line took 2 months to make ready for use and was brought to use on 31st May 2012. So 3 months employment cost is there. So we need to be careful because it has taken only 2 months time. The other overheads were incurred during 2 month period ended 31st May 2012. They included an abnormal cost of zero point 0.3 lakhs. So I am clear that 0.3 lakhs is to be excluded. Okay, because it is abnormal loss, abnormal cost. The production line is expected to have a useful economic life of 8 years. After 8 years, FA Limited is legally required to dismantle the plant in a specified manner and restore its location to an acceptable standard. The amount of 2 lakhs included in the cost estimate is the amount that is expected to be incurred at the end of useful life of the production line. The appropriate discounting rate is 5%. The present value of 1, okay, is 0.68. So I need to multiply that 2 into 0.68 and that is the amount that can be capitalized. Present value of dismantling cost. Yes, yes, yes. 4 years after being brought into use. Oh, is it 1.36? Okay, we'll take that. 4 years after being brought into use, the production line will require a major overhaul to ensure that it generates economic benefit for the second half of its useful life. The estimated cost of overall at current prices is 3 lakhs. Okay. No impairment of the plan had occurred by 31st March 2013. So what is the current year? 1st April. Fine. So first year and there is no impairment loss. What is the first part? Which of the following needs to be capitalized? So very easy. Very easy answer. This is actually our RTP question, okay? Not RTP for May 2025, but this is an RTP question. Yes, D. Compute total amount to be charged to statement of P&L with respect to production line for the year ended 31st March 13 and balance of provision for dismantling cost to the, balance sheet. What is the answer? Option B, is it option B? Option A. Okay. Now, listen. What is the amount to be charged to P&L? Option C. The correct answer is option C. Correct answer is option C. How option C? What is the total amount to be charged to P&L? So here I need to find depreciation. First year there is depreciation. Finance cost. Yeah, I need to do. So first question is easy, means I have some work in the second question. So depreciation I need to calculate. Finance cost is to be calculated. And the last provision for dismantling cost is easy. So first what I can do, my smart work is that, as you said, 2 into 0.68. 2 into 0.68. My dismantling cost is 1.36. So after 1 year, unwind plus 5%, it should be 1.42. Yes or no? When I unwind at 6%, sorry, 5%, when I unwind at 5%, it will be 1.42. Yes or no? All of you? So it can never be this 1, 2, 3. It can never be this 1, 2, 3. Now, so that is the easiest way of arriving the option. Now, no, I need to calculate depreciation. Okay, I need to check because I'm a CA student and I'm not writing the exam right now. Exam hall, I'm not in the exam hall. So I need to check how it is 1.76. For that, I have some work. What work? First, I need to calculate how much is the cost of, I'm explaining, please listen all of you. I need to find out the cost of this production line. Cost of this production line will be 10. I'll not capitalize this. This 1.2 is for 3 months into 2, that is 0.8. I'll be capitalizing 0.8. Other overheads, 0.9, and there is an abnormal cost of 0.3. Abnormal cost of 0.3 is to be deducted, so 0.6. 0.6. Payment to external advisors. Yes, I can capitalize. Dismantling cost. Yes, 1.36 I can capitalize. So total is 10 plus 0.8 plus 0.6 plus 0.5 plus 1.36. Total is 13.26 is the total cost of my asset. Okay, total cost of my asset is 13.26, which for the purpose of depreciation, I need to divide this into 2. What 2? That is, as per our Ind AS 16. As per Ind AS 16, okay, when there is a major component to be replaced or major overhauling expense, major inspection to be done, then the cost of that part is to be identified and should be depreciated separately. Have you all studied that provision? When there is a major component, major inspection, major overhaul, that is to be, which is having a significantly different useful life, that is to be separated and depreciated. So here we have such expense here 4 years after being brought to use. 4 years. Yeah, after 4 years. We need to find out the depreciation for this. The estimated cost of overall is, yeah, like ship and aircraft case. Exactly. So we need to find out how much is the depreciation for this. How much will be the depreciation for this 3 into 1 by 4, because 3 is cost of 3 is cost and 10.26 I have separated. This 3 should be depreciated over how many years? 4 years. So 3 into 1 by 4. But 3 into 1 by 4, can I fully depreciate for the current year? If I do 3 into 1 by 4, so this 3 should not be added to. No, should not be added. It is already in the cost. That cost is what we divide. Don't add it again, because when I acquire the asset for the first time, I can use the asset without overhaul for next 4 years. Next 4 years I can use without overhaul means after 4 years only I need to capitalize. Now this 13.26 includes that 3. Okay. The 13.26 includes that 3. Yeah. So 1 by 4. Then what is my next step? When I depreciate 3 into 1 by 4 into full year, do I need to depreciate? No, it has taken 2 months to complete. 10 by 12 and 10.26, 1 divided by what is the useful life of the balance? Balance useful life is, it's given that the useful life is 8 years. 8 years into 10 by 12. So what is the depreciation? 3 divided by into 10 by 12. 0.625 and 10.26 divided by 8 into 10 by 12, that is 1.06875, 1.07. So total 1.07, 0.625, 1.695 is the depreciation. 1.695 depreciation plus that 1.36 into 5 percentage, 0.068. 1.763 is the total expense. So my correct answer is this. So should I go for this calculation for that just 1 mark? That is what, if you are smart enough, just do that, the second part. 1.42, 1.36 plus 5%. 1.42 is the closing provision for dismantling. As there is no other option having 1.42, you can directly go for that option number C. Okay. Yes. So, option number C. Now, compute the cost of production line to be capitalized initially on 31st March 22. Oh, yes. 13.26. 13.26. Yes. Some MCQs need more time, some need very less comparatively. Then, yeah. Then question number 2. Yeah, question number 2. We can move. So, correct answer. Why did we add 0.68 to depreciation? Shivani, if there is provision for dismantling after 1 year. So, on a particular date, we have capitalized. Now, after 1 year, it can be unwinded. It can be unwinded. Okay, 5%.
Ma'am, if I can speak for just 1 minute.
Yeah, yeah.
We did this 0.068 already to 1.365. No, for calculating the provision for dismantling, we already did that unwinding. No,
No,
separately we
no,
need to
no,
do
no, no,
it.
no, 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 no. That is mistaken. See, this is what is this 0.68? This is the discounting factor.
Yeah.
Discounting factor. That is 1 rupee after 8 years. The current present value is 0.68. So I
Right.
need
Yeah.
2 crore or how much? Yeah, 2 lakhs after 8 years means 2 lakhs after 8 years means today's 1.36.
Yes.
Today's 1.36. But after 1 year, now see what is this 1.36? I'll create provision 1.36. This is provision for dismantling after 8 years. But
Yeah.
now you are coming to the first year end means first year end, this is a provision payable after 7 years. So it should be unwinded.
Yes, ma'am. Ma'am, I got this point. The point I didn't get was the other part.
Yeah.
In 1 point, we're getting 1.69 something. And then we are again adding 0.068. That's the part I didn't get.
Yeah, the thing is, for the first one, 1.69 something is depreciation.
Yes.
That is depreciation. See, I have two expenses. Yeah, they have asked total expense. See, that is what I need to do, depreciation as well as unwinding. Both, how much will be the total expense. So, depreciation when I take, I've taken this and divided. I hope that part is clear. This is 13.26, not 1.36. This is 13.26. I depreciated. That part is done. Depreciation
Yes.
I've calculated. Depreciation
Okay.
is fine. Now I have a liability on my there is a liability provision for dismantling. What is the treatment of this provision for dismantling? Every year it should be unwinded. So that 8th year, that provision balance should be 2. Now it is 1.36. It should be
Right.
unwinded 8 times, and after 8th year or at the end of 8th year it should be 2. So it should be growing. So the entry
Got
I
it.
have to pass every year is interest to provision, interest to provision, interest to provision. So every year I need to do that. And interest to provision is first year 1.36 into 5%, 0.068. That
Right.
interest will be transferred to P&L.
Yes.
Yeah,
Yes, ma'am.
yeah. So
I got it, ma'am. Thank you
yeah.
so much.
Okay, okay. Ma'am, no, that related to asset. They are asking that this question is related to asset only. Uh, with respect to production line. Employee cost is some other. Third month employee cost is not related to production line. I cannot capitalize it. Related to production line. Yeah, related to production line means only this one. Okay. Now, during the year, can I move on? Can I move on to the second question? Yes. During the year, HSL issued compulsory convertible debentures on a private placement basis 100 lakhs. Okay. Each compulsory convertible debenture is convertible into 5 shares at the end of 4 years from the date of issue, and then and annual interest is payable at the rate of 6%. At the initial recognition, HSL recognized a liability component of 20 lakh 79,063. We all know this compulsory convertible debenture is a compound financial instrument. Yes, that has to be divided into equity and liability. Yes. And liability component is 20 lakh 79, oh sorry, 20 lakh 79,063. Okay. So naturally 100 lakhs minus 20 lakh 79,063. Equity component will be obviously more in compulsory convertible instruments. Yes or no? Equity component will be more in compulsory convertible. If it is optional, then liability component will be more. Yeah, 79 lakh 2937. It also incurred transaction cost of it also incurred transaction cost of 2 lakhs. Nature of expense includes fees to legal advisors, registration and regulatory fees. Okay, so what is the treatment of transaction cost in case of compulsory convertible debentures or compound financial instrument? The 2 lakhs should be allocated in this ratio. Very good. Now, what will be the accounting treatment of directly attributable expense? 2 lakhs. Entire 2 lakhs. Which is the correct option? Option C. Option C. Do I need to recognize liability? Yes, there will be compulsory, even if it is compulsory convertible debenture, 6% interest is payable annual. So there is a contractual obligation to pay cash, contractual obligation to pay interest. So there will be liability component. Present value of cash outflows, I am discounting at that market rate of interest, where there will be liability component, dividend, not dividend, interest. Interest is liability, so balance is equity. Especially in this question, but year-end liability still need to, yes, you see, it is not about year-end. We calculate 4 years, present value of interest, present value of that interest outflows. 4 years interest outflows. I'll be discounting at market rate. So here in this question, market rate is not given. Yeah, that is what they have directly given you, the liability component. They've directly given you the liability component. Okay. So here in compound financial instruments, we need to separate it as equity and liability, and transaction cost should be allocated. I hope the answer is option number C. Liability component is there. Just go through that area. In almost all the questions, compulsory convertible we need to split, and liability component will be less. Equity will be more. Go through that CCCPS question. Okay. Then can I move on to the third one? Yes. Okay. AB Limited purchased 10,000 shares on 1st April 2016. Oh, 10,000 shares on 1st April 2016, making the election to use the alternative treatment under Ind AS 109, that is FVT OCI. So we purchased 10,000 shares and we categorized it as FVT OCI. Okay. The share cost is 3.5, transaction cost is 500. Shares are trading at 4.5. What is the gain to be recognized on these shares for the year ended 31st March 2017? See, very clear. But these are all RTP questions, not my creation. So just 35,000 plus I'll be capitalizing because it's a financial asset. It's a financial asset. Naturally, we'll capitalize that transaction cost. We'll add 35,500. But year end value has become 45,000. So profit is 9,500. Okay, very good, very good. That's it. Now 4 and 5. 4 and 5. Listen, 4 in A16. In A16, Alpha Limited has machinery that cost 4,800. Provision for depreciation 1,600 as on 1st April 2018. On that date, the remaining life of machine is 6 years with residual value of 800. On the same date, one component of the machine is replaced. The price of new component is 600. Okay. And the cost of old component was 500 with accumulated depreciation of 200. The supplier of the new component took the old component at a fair value of 360. On 31st March 19, the machine is revalued as per company policy at 5,000. On 31st March 2020, an impairment loss of 900 has been recognized for the machine. Past journal entries for the year ending 31st March 19, 20, 21, depreciation is to be charged on straight line method. Okay. So what are the my calculator? So what are the steps to be done? So my on 1st April 2018. So first I am writing the working notes. Question number 4. Working notes. Before journal entries, I understood the requirement is working notes. So first, on 1st April 2018, 1st April 2018, the gross value given is 4,800. Accumulated depreciation is 1,600. Therefore, carrying value of the asset is how much? Yeah, 3,200. 3,200. Okay. Now, is there anything to be done? Is there anything to be done? Normally, this has to be depreciated over 6 years. But on the same date, one of the component is to be replaced and price of the new component is 600 and cost of the old component is 500 minus 200, that is 300. Supplier took the old component at a fair value of 360. Okay, fine. So before depreciating, what should I do? What should I do is add on this date, add cost of new component, that is to be capitalized. Cost of new component to be capitalized is 600 less. So I need to pass journal entry. I am marking. I need to pass journal entry for this. I need to pass journal entry for this. Less. De-recognize the value of old component. 500 minus 200, that is 300. I need to de-recognize. So that here is no other transaction is there. So not no other transaction. Here itself I am writing there is depreciation. How much is the depreciation for year 1? Depreciation for year 1. 250, 450, 450. It is 450. Very good. Very good. Those who have got it, very good. Those who couldn't, it's okay. Let's find out how it is 450. How you are getting 450. So one component is replaced. There is no specifically the life of the component is not given. So anyway, remaining life of the asset is 6 years. Life of the component is not mentioned. So very easy. What I'll do is now what is the cost of the asset? Yeah. 4,800 minus 1,600, 3,200 plus minus 300, yes, 3,500 minus they have given there is a scrap value of 800 divided by 6, that's it. That's it. So it's 450. Yeah, 450. So that 18, 19, I'm identifying I have 3 journal entries. Okay. So it is 3,050. My asset value is 3,050. Now 3,050. Now 31st March 19. What is happening? The machine is revalued as per company's policy on 31st March 2020. So what I can do is first I'll do charge the depreciations. Next year, less 18, 19 period is already done. 19, 20. 19, 20. Again, depreciation. How much is the depreciation? 31st March 19 only they have revalued the asset. 31st March 19. So revalued figure is 5,000. 31st March 19 they have revalued to 5,000. So depreciation will be 5,000 minus 800 divided by remaining 5 years. 840. 840. So 5,000 minus 840, it is 4160. 4160. Year-end value has become 4160. Now this is the carrying value on which date? This is the carrying value on 31st March 19 ano. 1920 period revalued figure is 31st March 19 we have revalued. Now 1 year, yeah, 31st March 20. This is on 31st March 20. See, 1st April 18 we started. This is happening in 19, 20. This is 18-19 period. 18-19 period. Now revaluation, after revaluation, this is 18-19. Now 19-20 we have only one journal entry, that is with regard to depreciation. Now maybe here 4 and 5. Now 2021 period. What is happening in 2021 period? 2021 on 31st March 20 or 1920, an impairment loss of 900 or that day, there is nothing in 2021. Impairment loss of 900 has been recognized for the machine. So impairment loss on this date, not 2021, impairment loss. Impairment loss. They are giving the impairment loss as 900. So closing balance. I have to pass a sixth journal entry on 31st March 20. 4160 minus 900, that is 3260. Yeah. Now 31st March 2021 is also asked. What will happen in 31st March 2021? My seventh entry, depreciation for 2021. Depreciation for 20 out of revaluation surplus. What was, is there a doubt I missed out? Yeah. So it is asset is revalued to 5,000. Revaluation surplus 1950. Yeah, okay. Revaluation surplus 1950. Correct. Impairment loss entry. Yeah, we are coming to, yes. Okay, we will come to that. Depreciation for 2021 is 615. So I identified the transactions. There are 7 transactions I should not miss out. Without journal, without this working note, if you can directly go for the journal entries, good. But here I have identified what are the areas to be done. So journal entries, what are the journal entries to be passed? What are the journal entries you have passed? Just make a comparison. So first journal entry on 1st April 2018. I have acquired a part. A part is replaced. So the entry is PPE or machinery account debit to PP or machinery account debit to, assuming it is paid, or you may write supplier payable. But assuming it is paid 600. I'm not writing narration here, being, ma'am, tell how 615. Yeah, how 615? That is 3260 minus 800. There is always a scrap value in the question. Divided by what is the remaining number of years? 4 years. Okay. Okay. So PPE or machinery to supplier 600. That is the first entry. What is the journal entry you have written for D recognition? Journal entry for D recognition. What is the entry you have written for D recognition? 1st April 18. Entry for D recognition. Be careful. If you have passed it correctly, well and good. My normal D recognition journal entry will be P and L to machinery. But here, I should pass provision for depreciation. Yeah, but this is the entry I should pass. Provision for depreciation 200. Machinery credit 500. Then 300 is gone from the book. Then bank account debit. It's not normally when we derecognize, we pass the journal entry P&L to asset because it is a loss. But here it is not a loss. We gained as 300 WDV of part we sold for 360. Yes or no? To machinery and to gain on disposal 60. Are you okay? Provision for depreciation account debit, because normally if we sell a part we'll pass bank account debit 360, to asset 300, and to gain to P&L 60. Here I should not pass this journal entry because they have given provision for depreciation and cost separately. Yes or no? This should be the journal entry that you should do. I think for exam, if you write this also, they may consider, they may not reduce full marks, but still this is when provision and this is separately. But don't we need to recognize new component? Don't we need to recognize new component? Yeah, new component is what recognized here first. PP machinery to cash. It is a capitalized. In the next, ma'am, is it okay to eliminate provision for entire PP as one journal entry? That we'll be anyway doing for reevaluation. But here, when I eliminate one component, when we eliminate only one component, only that component has to be credited. The WDV of that component is to be credited anyway. But I think that is also fine. If you anyway you are eliminating fully, then to machinery. This journal entry is what you're talking about now. For the derecognition, can you do this journal entry? That is what I'm telling. They won't reduce your full marks. Definitely this is correct. Provided provision is already reduced, adjusted. Can you tell in short? So after I eliminate provision for depreciation, can I do new machine? Yes. You can go for a combined entry. You can go for a combined entry. That's fine. Combined entry is okay. Hmm? See, anyway, let me finish this. Okay, let me finish this. Let me finish this. Now, what is the next? 31st March 19, 31st March 19. First time passing the entry. Depreciation to provision for depreciation. First year depreciation. Depreciation to provision for depreciation. 450. Yeah. Being depreciation charged for 1 year. Charge for that year. Being depreciation charged. Okay. Now on the same date there is revaluation. We all have learned at the time of revaluation we have to go for either depreciation elimination approach or you should go for restatement approach. Yes or no? At the time of reevaluation, the accumulated depreciation should be either eliminated fully or you should go for restatement. And I was telling you, in the most of the questions, when the question is silent, we go for depreciation elimination approach. We go for depreciation elimination approach. Yes. So we have to pass. That is when we revalue the asset. My first journal entry should be provision for depreciation. Provision for depreciation to machinery. How much is the provision for depreciation you had till now? Till now, provision for depreciation you had is, so I'm checking from the question, provision for depreciation you had was, opening provision you had 1600, and now you charged a provision 1600 you already have, and you eliminated a provision of 200 at the beginning itself, and now you charge the provision of 1004, sorry, not 1450, 450. So how much is the 1850 is the provision for depreciation you had till now? Yes. So provision for depreciation to machinery 1850. Okay. And then revaluation entry is machinery account debit to revaluation reserve in OCI or revaluation surplus in OCI. How much is the revaluation reserve in OCI? 1950, 1950, 1950, 1950. Yes, 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 yes. I hope to avoid that confusions only we have done 3050 has become 5000. So 1950. So these are the journal entries. You can go for combined entry or split entry, but these are the entries you should pass. Are you, ma'am, can you just show the entry for restatement approach? If it is restatement approach, what is to be done? Say, restatement approach, now what I'll do? 3050, 3050 plus how much was the accumulated depreciation? We already have had that date, 1850. 3050 plus 1850. 4900 is the asset value. 950 is the 1850. 1850 was the accumulated depreciation. So 3050 was the asset value. This is what revalued to 5000. So guys, you tell me what is my next step. 1950 divided by 3050. I'll identify a percentage. What is the percentage? 63.9 percentage. Yeah, 63.93. Yeah, 63.93. So I need to increase asset accordingly. I need to increase accumulated depreciation accordingly. So 4900 into 63.93 percentage. I need to increase, or my entry will be machinery account debit 3133 to accumulated depreciation account debit 1850 into 63.93%, 1183 to revaluation reserve in OCI. 3133 minus 1183, 1950. Alvin, are you okay? Is it correct? Is it clear, all of you? But I'll not go for this approach if the question is silent. If the question is silent, this is not what we go for. ICA standards going for that elimination approach. That is what we'll do. Yes. Okay. This is what restatement approach. I'll identify the percentage of increase and I'll accordingly increase machinery and accumulated depreciation. Okay. Yes. Now 31st March 19 is done. Now 19, 20, 19, 20. What is the next entry? Depreciation depreciation to accumulated depreciation. My new depreciation is 840. 31st March 2020. My new depreciation to provision for depreciation to provision for depreciation 840. Okay. Then 31st March 2020, there is impairment loss. So same date. Impairment loss to asset. So how much is impairment loss? 900 is the impairment loss. Now I'm thinking from where I can charge. Will I write off impairment loss against P&L or will I write off impairment loss against revaluation reserve? I have enough and more balance in my revaluation reserve. Option 2 is not followed. Transferring revaluation reserve to retained earnings is not followed. So I'll do directly I'm doing revaluation reserve in OCI. That is my impairment loss. Yeah. Yes. I'll do it. I'll share the answer. Okay. Yes. Now last 31st March 21. I also do last year depreciation. Depreciation to provision for depreciation. 615. If I do all these entries, I can get full marks. So which means I need to be very careful while passing the journal entries. I need to be like, I should go for 100%. I should prepare for 100%. I should read the question, plan it accordingly. Then I'm sure you can get 100%. But of course, you should be prepared like, ma'am, 840 depreciation for 31st March 2020 that I have done here. 840, see, 5,000 minus 800 divide by 5, 840. Okay. See, what I was telling is, you should not feel like, oh, this is lengthy, in between I may miss out. See, expect, we are CA final students, the questions should be like this, and answers will be lengthy. Ma'am, additional depreciation due to revaluation entry, revaluation reserve to retained earnings. No, that is not my depreciation entry. First of all, I have to be very clear. Whenever I go for this revaluation, there will be, if there is revaluation surplus, if there is revaluation reserve created out of OCI, then that revaluation reserve should be transferred to retained earnings either at the time of, come on, Parno, respond, either at the time of sale or during the remaining life. During the remaining life, the amount will be equal to additional depreciation. Yeah, the amount will be equal to additional depreciation. The amount of transfer will be equal to additional depreciation. I think you can refer illustration 4 or 5 in our study material. Illustration 3. The result 7 lakh 29 lakh. That study material question, if you can refer, that problem, that doubt will be cleared. So during the remaining life, and the transfer amount will be equal to additional depreciation. Okay, transfer amount will be equal to additional depreciation. Transfer amount. Do I need to explain? Not required, no. A transfer amount will be equal to additional depreciation. That's it. Not that additional depreciation should be adjusted against a revaluation reserve. That is not correct. Can we do two entries for impairment? Yes. Impairment to asset, revaluation reserve to impairment loss. You can do both journal entries. I just combined it just for saving time. Okay, because what I thought is, I already told you our class will be till 4. It's almost 4:30. So I was also in a hurry. Okay. Yeah. Shall we go for the next question? Yeah. Question number 5. Yes. Yes, G Limited granted a loan to Y Limited. G Limited granted a loan to Y Limited amounting to 40 lakhs. Yes, we'll do that. So, we'll do. I'm planning about that. See, G Limited granted a loan to Y Limited amounting to 40 lakhs repayable in 2 years at 46 lakhs. However, due to economic recession after 1 year, the repayable amount has been revised to 44 lakhs. Okay, understood. So 40 lakhs is the loan given to Y Limited, repayable in 2 years at 46 lakhs. However, due to economic recession after 1 year, the repayable amount is revised to 44 lakhs. Okay. The effective annual interest for such loan is 6%. Loan processing cost is 2 lakhs. X Limited's accountant suggested to charge processing cost to the first year P&L, to credit 4 lakhs as interest income, to carry loan account in the first year balance sheet at 40 lakhs. Your advice is solicited and past journal entries. Okay. So here there is a loan which I have given for 46 lakhs. The amount given is 40 lakhs. Repayable amount is 46 lakhs and EIR is 6%. Have they given a different market rate? Have they given a different market rate? A different actual rate is 6% at stake. EIR is 6%. A different market rate is not given. So here what I should do is, as they have not given a different market rate, what I will do first, as per Ind AS 109, as per Ind AS 109, the loan given is a financial asset. The financial asset is initially recorded at initially recorded at fair value, but they have fair value plus transaction cost. So there is no information. Then we'll write there is no, in the absence of information regarding market rate, in the absence of information, in the absence of information regarding market rate, absence of information regarding market rate, okay, fair value is taken as, fair value is taken as 40 lakhs. Fair value is taken as 40 lakhs. And transaction cost is added. Transaction cost is to be added. So loan is loan. That is financial asset is initially recorded at, financial asset is initially recorded at 42 lakhs. Is initially recorded at 42 lakhs. Are you okay? Initially, loan is recorded at 42 lakhs. Loan is recorded at 42 lakhs. Now, what is the requirement first? Transfer of processing cost to P&L is wrong as per the provision. So I am writing the answer to the first point. The processing cost to transfer of processing cost to P&L is wrong. As per the provisions of the standard. You can write as per the provisions of the standard. Okay. Now, what is my second point? To credit 4 lakhs as interest income in second year P&L. Second year P&L. So, let me check. For that, I'll prepare amortize. Can I take 7 point as interest rate? From where did you get the 6 lakhs? Where did you get 6 lakhs as the interest? Total overall over a period of 4. See, this is payable in 2 years. No, no, this is payable in 2 years. So EAR, otherwise also how do I calculate EAR? EAR present value of 46 lakhs. I'll take two guessed rates. I will guess a rate for 1 year. I'll guess a rate for 1 year. Then I'll guess a rate for at which 46 lakhs equals 40 lakhs. And then interpolate, trial and error method, interpolate and find out. That is how we calculate EAR. That is wrong. 7.5%, 15%, that is too much straightforward. That is against the provisions of Ind AS. Anyway, 2. I'll prepare amortization table. Amortization table, year 1, year 2. So opening was 42 lakhs. My opening is 42 lakhs. Interest unwinding will be 42 plus 6 percentage. 42 into 6 percentage, 2.52. First year I'm not repaying anything, so my closing balance will be 44.52. But there is some information given. However, due to economic recession, after 1 year the repayable amount has been revised to 44 lakhs. So here in year 1, closing balance of loan is, in year 1, closing balance of loan is 44.52 lakhs. Closing balance of loan is 44.52 lakhs. However, the repayable amount will be only, not modification, the repayable amount is only 44 lakhs at year 2. Therefore, there is dash. Can anyone say therefore there is? No, it's not given that the contract is modified. Therefore, there is very good impairment loss. There is impairment. I expected 46, but due to recession, there is impairment loss. How much impairment loss? There is impairment loss. My present value of contractual cash flows and present value of expected cash flows is different. When present value of expected cash flows is less, there is impairment loss. How much is impairment loss? So is it 44.52 minus 44? No. First I'll calculate present value of 44 lakhs receivable after 1 year, because I'm standing at the end of year 1, and year 2 balance is only 44 I'll be receiving. So next 1 year I need to discount. Yes, 3.01 is the answer. So how will I discount it? Into 44. 41.51. Closing balance in year 1. Closing balance or book value in year 1, 44.52. Therefore, impairment loss. .01. Impairment loss to financial asset. I'll pass the journal entry. Impairment loss to financial asset. Impairment loss to financial asset. So in year 2, my opening balance will be 41.51. Repayment amount is 44. So interest opening balance. Interest. There is repayment. and closing balance will be nil, or closing balance should be nil. So how much should be the interest? 2.49 should be the interest. So 2.49 is the interest. The question says interest is 4 lakhs, correct? No. The interest given is the interest given 4 lakhs is incorrect. Interest to be recognized as income is interest to be recognized as income is 2.49 lakhs. Okay. Now, to carry loan in the first year balance sheet at 40 lakhs. No. First year and in the first year, in the first year, loan account balance should be, first year loan account balance should be how much? The first year loan account balance should be, first year end loan account balance should be 41.5. It was 44.52, but after impairment loss, it should be 41.51. After impairment loss, it should be 41.51. 41.51 after writing off impairment loss. After writing off impairment loss. So if you were able to answer this, well and good. If you couldn't do it also, it's fine. We are learning. We are doing it. We are learning. Still you have days in front of you, almost 45 days in front of you. Still you are having time. So if you, this is not study material question. So of course, maybe, and this is not a past paper question, MTP, RTP. So maybe first time when I try, I may make a mistake, but I'm learning from it. Okay. So if I've done it, very good. Otherwise also it's fine. So is it okay? Hmm? So what is more important is please try it. If there are maybe students who are like just reading the question paper and answer, but that may not work. Always try next week. So let me make it very fast. Thank you. So please don't leave. So let me tell you the next week's plan. Please don't leave. Let me explain the next 2 weeks plan. Next week's plan. Next week's plan. Just try and also attempt the paper. So please listen. Yeah. Hmm? So hoping that at least that part is safely done, and we need to revise. Next 1 month we need to revise that, but still next week, that is March 17 to 22nd, my focus is on very important area, business combination, 115, 102. These are big standards, but 102, maybe you would have done your regular class will be maybe for 8 hours to 10 hours or maybe 2 days. So 102, generally it is okay for us. I don't know 102, but these two standards I need to give so much of importance. And I was telling, the institute was not asking a big business combination question for last few attempts. May 23, a business combination question came for 16 marks. Then November 24, May 24, November 24, they have not asked business combination. So it's due. So they can ask business combination. Then then two small standards, 34 and 24, because we are combining, and 12. What is 12? Are deferred tax. You know the importance of doing deferred tax before business combination. So this is what I have made. That is Monday, 4 hours. Maybe first 2 hours I'm studying. I'm putting all my efforts for India's 12. I'm putting all my efforts for India's. So my first 2 hours, my all this efforts will be for India's 12 because India's 12 is very important. So first 2 hours I'm doing India's 12. Then I'm slowly getting into business combination. Tuesday full I'm just going through business combination and I'm highlighting important questions. I'm highlighting important questions. Okay. And my what is purchase consideration, all those calculations, small questions you can leave, but you should try a big question and see like professional dynamic question repeated 3 times. Then May 23 question swan and duck question is very important. So try and illustration that test your knowledge, that big question 12 illustrate the test your knowledge question number 12. All TYK questions are important. Then Wednesday I'm allocating 3 hours. So just I have done some business combination areas. Then 3 hours I'm allocating for this 102. Maybe 2 hours is enough. That is totally depending on your knowledge on this 102. Then again, I have identified some questions in business combination and I'm trying. Then this also I'll do this business combination. Thursday, I'm starting with 115. I'll share this in the group. I'll share this in the group. Just go through. 115 and 1 hour important questions of 102. Then again, next Friday, 115 and 34 combination. 34 for 34 and 24, I allocated only 1 hour. And Saturday, 2 hours, I'm doing this in the S24, and the last Saturday 2 hours we'll be doing the revision. You will do the revision and Sunday we'll take a test. Okay, just go for it. Maximum you ma'am, FI class watching YouTube, fantastic. See, currently, seriously, I'm telling, currently my schedule is upon God, I'm saying, I'm taking a CMA final class in Thrissur. So it's like classes for 7 hours, not 7 hours, 8 hours, class 9 to 6. And I have almost 4.5 hours travel. Morning 2 hours to Thrissur, back 2.5 hours to 3 hours. So it's like 8 hours class and 5 hours traveling. Seriously, I'm telling, till 26th, that is my schedule. So coming back, I'll be reaching here at 8 o'clock and then I need to edit the videos. That is where last time also financial instruments, I was sitting in the night and editing and then uploading. If I definitely I'll see whether I have this 12 in AS 12 and 116 you said, right? 116. I'll definitely check for those videos and I'll upload it. But I need some time. So tomorrow onwards, you should not ask where is video. That you should not ask because I need some time. Okay. Hmm? So that's it. 12 is there in YouTube, LA. Undo. That I don't know. That I'm not sure. I'll check. I'll check whether it is there. Hmm? I'll check if it is there. If it is not there, I'll upload. I'll upload. Okay. So I think I'll share this in the group. The same strategy but different topics. I'll share this in the group. Um, the answers also I'll share it. You can leave because you should not waste your time. You can leave. Thank you so much. See you in the next week. Ensure you are attending the exam. Okay. Ensure you
Thank
are.
you so much, ma'am.
Thank you. Take care. Bye.
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 Ma'am, if
Yes.
we already have a backlog, I'm not sure how to plan going forward because I
See,
already have a backlog.
yeah, definitely that is possible. I mean, that is what I was saying. It is natural to have a backlog. Then I have to find extra time. Extra time means, first of all, are you writing only one group or both groups?
One group only.
One group only, then you need to accordingly adjust the other subjects because FR is lengthy compared to audit and slight changes within this. I find test and knowledge question a little difficult. That I'll check. What? Uh, Yeah, you have to make slight changes, like maybe one full day for FR and accordingly adjusting the time for audit and AFM. And maybe you are finding audit a bit lagging, then you have to uh, give more time for audit. Accordingly, you should adjust.
Got
Um, yeah, that person to person it is different, and this is totally one schedule. It may not be possible for everyone to stick on this schedule. Sometimes for some areas I need more time than others. My strong area could be weak area for others. So accordingly you need to adjust.
Okay, ma'am. Thank you.
Ma'am, actually, I have a doubt regarding the concept.
Ah,
Hello.
Shilpa, yes.
Ha, ma'am, can you please explain regarding the conversion of amortized cost to FETOCI, amortized cost to, all the permutation and
Yeah,
commission.
yeah,
I'm,
yeah.
I'm completely getting
Understood,
stuck.
understood, understood, understood. See, amortize all the six conversions you said. Oh, only the
Yes,
six.
ma'am, because when I'm trying to solve, I'm completely getting confused. I don't know why.
Okay. Uh, amortized cost to FET, P&L, FET, OCI. So here what I'm doing, amortized cost asset is at rupees 100. So my first point is measure at fair value. Measure at fair value. On that date, fair value is 101. So here I'll pass the entry bond FVTPL and 101 to bond, because in the question it is bond, that is why I'm writing bond amortized cost. I'm de-recognizing 100 to P&L. I'll transfer to P&L. Okay, here
Okay.
same entry. The only thing is that instead of to P&L it is to OCI, fair value reserve in OCI. There's no other adjustment. Okay.
Okay.
Now, one sec. Now, what is my next one? FET, P&L, to amortized cost, and FVT, OCI. Okay. FVTPL to amortized cost and FVT, OCI. FVTPL to amortized cost and FVT, OCI. This is 100. And again, I am computing the fair value as on today, that is 101. Now, what the standard says is, consider this 101 as the gross carrying value. Gross carrying 101 is today's value. Then find out the cash flows I am expecting, because if it is amortized cost, I'll be getting cash flows. So take this cash flows and 101 and identify the EAR. My journal entry will be bonds at amortized cost 101 to bonds FVTPL and gain to P&L. Of course, the gain to P&L, that one. Then here, if it is FVT then bond I'm charging to FVT that 1 rupee, to bond FVT not 101, to 100, gain to P&L. Only subsequent gain will be transferred to, subsequent gain or loss will be transferred to OCI. Are you clear?
Yes, ma'am.
FET to amortized cost. FET to amortized cost, FET P&L. So as usual, measure fair value. Yeah, measure fair value. Then whatever fair value, if it is 100, it has become 101. It's okay. Now adjust cumulative gain or loss. Cumulative gain, say for example, a 10 credit in OCI will be adjusted against, will be adjusted against asset. Not clear. So that is bond amortized cost. I'll measure at 101 to bond FVTOCI. It was at 100 and there is a gain. That gain should be now transferred to OCI 1. OCI 1. Now the cumulative amount in OCI 10 plus 1, 11. Cumulative amount in OCI will be adjusted against asset. Will be adjusted against asset. So now the asset will be recorded at 90. It's like originally 100 was the asset value. 10 credit in OCA means originally you bought the asset at 90. Yes or no, Shilpa?
Okay.
Yeah. So
Yes, ma'am.
finally the asset will come back to 90. Hmm? So first time,
Sorry, I actually got confused here. The original cost is 100.
or not original cost, carrying value is 100.
Carrying value is 100.
Which means
So
original
I
cost
had
was
a,
90. So 10 was
uh-huh.
credited to OCI. Now at the time
Okay.
of reclassification also 1 is credited to OCI. The total
Okay.
credit in OCI will be reclassified to asset, means the asset will now stand at 90 as if the asset is originally recorded at
Okay.
amortized cost.
Okay. Okay. Now I understood, ma'am. This
Okay,
is
okay.
okay.
And if it is FVT OCI to FVT PNL, the gain or loss that 10 or 11 whatever that will be reclassified to
Mm-hmm.
PNL. That's it.
Okay. Okay. Ma'am.
Okay.
Oh,
Yeah.
okay, ma'am. Thank you.
Okay, Shilpa. Thank you, everyone. I have an emergency, so with your permission, I'm ending the meeting. If anybody is there to clarify a doubt, we'll do it later. I'm ending the meeting. Okay.
Okay.
Okay. Thank you.